The reason why most investors lose money in multifamily properties is not because of a lack of money or due to bad deals, it's because they fail to identify the right location. Today, I'll be sharing with you 5 secrets you can use in identifying the right location when going into multifamily properties. Let me tell you a story. Some few years back, I met a broker who called me and told me about a property. Now, I was so naive at that point in time, I didn't have enough knowledge and understanding on how the multifamily markets work. Now, all I was concerned about was the listing price. As every investor would do, the first thing you want to know is how much is the property going for? What's the square footage? That's all I knew about the property. Now, when I went into that property, within a few months down the line, an investment I thought was a green deal for me, everything began to tank. From the bad tenants I have into the property, to the decline of the property itself. The worst case of all was the tenants I had in that property began to damage the property itself. So it lost price appreciation. It lost my own forecast in terms of my outlook for that property itself. That cost me several thousands of dollars. I don't want you to experience that. Again, today, like I said before, I'm going to be sharing with you guys the 5 methods I use in identifying the deals in the multifamily properties, the one that will give you the right buck for your money. Now, most of you might be new and says, Jeff, what is a multifamily property? Now, a multifamily property, by the word multi, means it's more than one in one location. Take, for example, we have the duplex, the triplex, or the quadruplex. A duplex is a building that has 2 units in one. By 2 units, I mean a unit has a 3-bedroom, for example, 2 baths in one location. The other units, which are all in one land structure, the other section has its own 3-bedroom, 2 baths, or 2-bedroom, 1 bath, depending on the mixed use of that property itself. Now, a triplex means 3 in 1. So you have one land itself, one land property. You have a building. That building is broken down into 3 different several units. Each unit is self-dependent on each own. So you have, for example, a 3-bed, 2-bath on one unit, has their own entrance, have their own facilities or amenities within its own region. The next unit could be a 2-bed, 1-bath. The third unit can be a 1-bed, 1-bath. In my other videos, I'm going to teach you how to understand the mixed use of a property itself. That's a triplex. Now, the one I'm always looking for, all my brokers know about that, is a quadruplex. A quadruplex is 4 in one unit. That is 4 separate units in one building. Now, with a quadruplex, the numbers is just phenomenal. So imagine you understanding what we're talking about today, understanding how to capture the right location, understanding the deals in the market. What will make your quadruplex not turn into a gold mine for you is your ability not to understand how the market really works itself. Why is location so integral? Among all my real estate deals, the biggest loss I've had is not understanding location when it comes to property. There are 2 things that is really low that can go wrong with your multifamily investments. If you fail to understand location, if you fail to understand what they call the tenant mix itself in your property, you can lose I've lost more than $1 million just not understanding what to do and not listening to my mentors. So what you need to understand when it comes to location is very simple. There are 4 secrets you need to have in mind. Number 1, follow the money. So you say, Jeff, what does that mean? My question to you is, where is the money flowing to? Where is government investing going into? Every 4 secrets I'm going to share with you today will crystallize or bottleneck into one. That one is the key flyer, is the key, it's the deal that breaks the rest of the deals. So number 1 again is this: follow the money. Where is government funding going to? What areas is government putting money into in infrastructure, amenities? That tells you those areas, those locations are locations where the government thinks there's cash flow. Number 2 is, where are the big retailers located? So you have the Publix, you have the Harris Teeter of this world. Where are they located? Where are they building their properties? Where are they investing money into? Listen up. Those big time retailers have research team. Those research team play a lot on data. They follow the data. The data don't lie. With those data, they're able to understand, okay, these are the areas we think investors who come into this area will have disposable income and can invest their funds into the properties itself. Number 3 is the building of infrastructure. So look at areas you see there are new growth trajectory. What is the growth trajectory of that area? Are there new schools being built? What's the quality of those schools? What is the quality of the amenities being built? That tells you that that location is key. Number 4 are industries within an area. When you have an area or a location where the industries, you see thriving industries, the big fives, the top level players, where they are centralized, it tells you something about a location in the property. So if you're looking at both a multi or a commercial, those 4 secrets can give you the direction. But like I said before, they all crystallize into one. In my book, The 30% Rule, on chapter 2 of that book, I discuss what we refer to as understanding the most important factor when you are looking at a multifamily property or a commercial property. And what is that? It's called the average household income. I'm going to repeat that. It's called the average household income. One of my key metrics. Now, when it comes to my key matrices, this metric, I don't jeopardize it. No way, it's impossible. One of my key matrix when it comes to looking at a property, understand if I'm going to spend my hard-earned cash. I've lost millions of dollars just failing to understand this thing I'm sharing with you guys for free. One of my key metrics is looking at a location. It could be a zip code. So it could be a small geographic area, but your concern is in that area, what is the average household income of the families within that region? As of 2025, the average household income in the US is $75,000. Therefore, if I'm going into a location, if I'm going to get listings from my brokers, listings from the MLS, listings by InvestFusion, if I'm looking at all the listings I'm receiving on my data, the first thing I'm going to ask myself is, what is the average household income in this area? Why is that important? What does it really matter? What does it matter? I'm going to give you 4 reasons why it matters. Number 1 is this. Where you have a location where the average household income is either at par or above the US average, it tells you, 1, those living in that area have access to disposable income. Now, if they have access to disposable income, therefore, it means that they can pay their rent. Don't forget, you are buying either a duplex, a triplex, or a quadruplex. Now, if everyone living in that area or who live in that location have access to disposable income, they can pay your rent. You're not going to fall into the trap I fell into by going to buy property in a location where people went in there, they destroyed my property, the value of the property tank, I could not sell. It's just ridiculous. You don't want to go into a place where you buy a property and then the people who live in that area don't have access to disposable income. So they will also help in maintenance of your property. 1, they pay their rent in a timely manner. That's 1. Number 2, they take care of the property as if it's theirs. Number 3, it's easier for you to raise the rent. That's why in my book, I will mention several key factors when it comes to the states you are investing money into. Watch out for rent control states. Guys, listen up. A lot of this I'm going to be teaching you guys here might be over your head. That's fine. You don't have to understand everything. Where you have questions, you can always reach out. And that's why we create this platform to help a lot of investors stay away from potential losses in the market. I've seen a lot of brokers not helping you, give you guys the right direction on where to go into when it comes to what you're buying. And so you have to understand what you're looking for. In an area where there's disposable income, or the US or the average above or equals to the US average, you see an influx of government cash flow. So government flows into that area in terms of infrastructure, amenities, structures. And what does that do? It makes all the surrounding properties appreciate. Let me tell you something. Listen up carefully. You can tell me, you can say, Jeff, listen up. I can buy a property in a bad location. Why? I can go and raise and improve the value of the property. Yes, you can improve the property's so-called value, but you cannot improve the value of the neighborhood. That's impossible. So why don't you follow the money? Why don't you follow where it's trusted, where the data has proven to be trusted? Data tells us that in this area where there's a huge influx of individuals with high disposable income, the number shows that surrounding businesses in that area thrive. Grocery stores. Why is those stores important in this kind of an area? So if you have a grocery store that is located in an area where the location has people that have either equals to or above the US average, it tells you that if your tenants who own businesses in that grocery stores, they will have income, they can pay their rent, you can raise the rent, you have access to more cash flow, and it's going to give you access to liquidating or doing what they call a cash out refinance to buy other similar properties because you have what? Consistent cash flow. So these are key players. These are key reasons why we look at an area where the average household income is either equals to or above the US average. Now, the fourth and final reason why we think that among everything else, most individuals, when they go into a multifamily unit, the first concern they ask you, they ask the broker is, oh, how's the schools in those areas? Guess what? Schools also follow the money. In an area where the schools, you see monies flow into infrastructure for the schools itself, it tells you because of the people living within that region, they have access to extra funds. And that's what's driving that investment in schools. Friends, if you are watching this, and you're telling yourself, well, how do I know all this? What do I do next? Now, what I've done for you guys is I've put together a 5 step-by-step blueprint. This checklist is what I usually give in my paid in my paid community, but I'm sharing this checklist with you guys today. That way, if you're among the first 24 persons to respond and says free guide right now in the comment section, I'm going to share that free guide with you guys. And once that is done, I'm going to close this up. This is zero. Don't sleep on this. When you follow the money, when you understand why this is so important, you will save yourself thousands of dollars.